A company took a bank loan of rupees 50 lakh on security of land and building, and it further issued 20,000 debentures of rupees 20 each as collateral security. Show its accounting treatment. Now students, we know that the accounting treatment of collateral security can be done in two ways. That is, when journal entry for issue of debentures is passed and when journal entry for issue of debentures is not passed. So let us deal it on case to case basis. Case 1, that is no journal entry for issue. But remember, in this case, entry for loan should be passed. So the entry for loan would be bank account debited to bank loan. Being loan raised. That is 50 lakhs. Remember students, in this case it is given security of land and building. There can be no mention about security of land and building because it is a primary security. Right? It is a usual practice to mortgage your assets while taking loan. So at the most what you can write in narration is being loan raised on security of land and building. But besides that, there can be no mention about this primary security. Now coming to issue of debentures as collateral security. Since in this case we are not supposed to pass any journal entry for issue of debentures, then the recording is done as a means of note in the balance sheet. That means the balance sheet would appear as follows. Balance sheet again the format is same, that is assets, amount, liabilities and amount. Now students, bank loan is a liability, hence it would appear on the liability side as bank loan and the amount would be 50 lakhs. Under this bank loan, we will write a note that is secured by issue of 20,000 debentures of rupees 20 each as collateral security. So this is the only note that actually tells us that certain debentures have been issued as collateral security and they have been issued in favor of bank for the loan that we have taken from them. Also remember one thing students, that in this case it is not necessary that the debentures issued as collateral security would be equal to the amount of loan that we have taken. It can exceed that amount and it can be less than amount as well. Coming to case 2, that is the case in which journal entry for issue of debentures as collateral security is also done. So the first entry would be for raising of loan, that would be bank account debited to bank loan, that is being loan raised or loan taken 50 lakhs. Now this is entry for the loan that we have taken from bank. Coming to issue of debentures as collateral security. So the entry for issue of debentures is debentures suspense account debited to debentures account, and the amount would be 20,000 into 20, that is 4 lakhs. being issue of 20,000 debentures of rupees 20 each as collateral security. Remember students, it always have to be done in proper format of journal. Now coming to the representation of this entry in your balance sheet. That is balance sheet of company as on date. We will have assets and liabilities. The first would be on the liability side as bank loan. This is the first entry, and the bank loan was for rupees 50 lakhs. Now students, we have taken or we have issued debentures as collateral security, and for that we have passed a journal entry. So there was debentures issued, right? So debentures are your liabilities. So under liability side, debentures will appear at the face value, that was rupees 4 lakh, and debenture suspense account, it will appear on the asset side for the value, that is rupees 4 lakhs.